Welcome to TradeTheMBI.com. This is John. This report is for the 1st of November. And, well, there we go. Keep pushing to the peaks. And this was that reset we talked about, and we were just looking for a continuation right of it. The previous high was 80.75, and you can see post-market we got it to 81.50, closing at 81 and a quarter. So right at the peaks. I think the NASDAQ even looks cleaner, and you can see that while shorts tried to activate in here, it's the long-term buyers in red that were continuing to rise, that breaking into the new zone, along with mid-term buyers that were enough to push it back to levels. Not to mention the fact that you had the exact news that we'd been expecting and that we'd been seeing from the other readings that we look at, that the economy is improving. And when you have economic growth, you know, the potential for increased profits is dramatic. So look at the NASDAQ, see this is such a clean change, turnaround, breakout. We went neutral, got below the green line, once back above, that's the long, and signaled beautifully with it, and it's carrying itself right away. Yeah, it's all going to get retraced eventually here, but not just yet. So we got some time. In the euro, still holding outside the range, even though it's been on a slight downtrend from, well, back over here. We recognized that it was in a short configuration as it started to break down. We started to see it was literally right here at that DOC spread that took place, and it hasn't moved a whole lot, but it's still outside the range, and it's still bullish overall for the S&P. And the central banks are going to keep doing exactly that, and that's just going to maintain it. The people even think about going to treasuries is an interesting choice. This is really the powerful one. There's really no worldwide threat that is driving oil at this particular point. I think what you're going to start to see is a major ramp up in demand that's going to catch people by surprise, and that's really what is going to fuel that. So that is a positive. Gold's not going to move just yet, but it's going to start to. I think this is an accumulation build right here, because the reality is you're going to start to see some degree of inflationary number. What we don't know is, and everyone keeps talking about this super low unemployment rate, but the reality is there's still a significant number of long-term unemployment. Now, when those move back into the workforce, the reality is you're going to get a real boom in growth, and it's going to spread itself in quite a few factors. So that's an exciting prospect. I think just from a consumer standpoint, they think that, you know, things may get tapped out, but the reality is if you start adding additional workers into the force that haven't been, it's only going to well, improve government spending and everything else. But not quite a buy, just laying the foundation for what could be. If we take a look at the 5K chart, you can see that it started early on. We had the dip below the red line here, little 6-7 reads, and we kind of stayed flat. But once we got over the 50% Fibonacci right here, we began to scroll across. We reached new highs, but then it began to elevate. It was interesting because it showed a decline, then we popped up a little bit, got a little bit of a retrace, it flattened out, and then we broke out going into the final, and that was just a straight up move. I mean, there was just no stopping it whatsoever. Those are the kind of things you're going to start seeing more of. I think we're going to start getting a little bit bounce volatility, which is long overdue, and thank goodness. But we're going to push very close to 26 and then get into the 26, 25 range pretty quickly, I would imagine, barring any sudden changes and things. It's going to get a little elevated. You can see we're getting into overbought, both even on the daily and intraday. And that's a little bit different than what we've seen from the previous rallies. And that usually has taken a couple of days to flatten out. And a lot of that, though, is the fact that it's mostly short covering and not new add-ins. We're going to be starting the beginning of the month. Couple of days out, the beginning of next week would be, you know, where all the new fund money comes in. So maybe we get a little bit of pullback into this here, but then break back out. The same thing happened before when we saw the big breakout. We retraced a big portion of it, but then came immediately roaring back to it. So all in all, it's good. The combination of the indicator updates with the new ABM resets and that is looking pretty good. And if I can keep not having issues with the TS platform, it will move along even faster, because that was really quite a pain, but needless to say, getting there. And I think it's going to be an exciting development. So looking forward to that. As always, though, trade well. We'll talk to you later.